All right, good evening, everyone. Welcome to the Hurley Investments Market View Commentary for the 5th of July. We have gotten past the 4th of July. Pretty neat to see what our market did today. So let me just start with asking you guys, especially those of you that are in indication, what happened to the U.S. markets today? And I know I've got an edge because I'm sitting up all night, so I get to watch this, but what happened to the U.S. markets today? I want you guys to be paying attention. I want you guys to be learning a little bit as we go through here. But what happened to those markets today? Mods and Mary actually typed something in. They actually went up for a change. Yes. They were down and they reversed. Correct. In fact, it was pretty funny. And it comes right back down to money flows. At 4 a.m. Mountain Standard Time, a report came out in regards to Europe and the euro being, can't type today, being at a 20-year low against the dollar. And literally at 4 a.m. Mountain Standard Time, the futures were up 0.3%, and they were down a negative 0.25% as soon as that report came out. And if you looked at the Forex, the euro just plunged against the dollar. It was such a steep drop so quickly. Then there was a second report. Europe's already in a recession. And before you know it, plain and simple, the U.S. markets opened down 1% and went down as much as 2%. And the big question is, as I was speaking with Keeve this morning, do we add more contracts? Do we, is this the big flush where we're going to jump down to 3,200? And the question that kept coming up was, question that kept coming up was, how does a European recession affect the U.S. markets by 2% in a day? And Keeve and I talked all morning long. We're like, really? That's what happened? I mean, I was watching the Forex and the pound versus the dollar, the euro versus the dollar, the yen versus the dollar. I mean, it was just, the dollar had so much strength. If you could have played the Forex and went for pips, you had 20 pips and 5 minutes to just book your profit and get out. And it was shocking. It was shocking that one report from a reputable source changed the U.S. markets by 0.55, a little over half of 1%. But our markets opened up down over 1%, and we were down as much as 2 at one point in time that first hour. And what Keeve and I are discussing, okay, is this it? Is this the big flush? Do we start adding more contracts? Do we expect this to be the trigger that sends us down farther? How is this affecting us when in all reality, the rate hike will be much more severe to the US than the fact that Europe's in a recession. Well, Kevin, if the dollar's stronger, then we'll have less exports. Okay, but the GDP is based here off of US, and if we're have such a strong dollar, we can buy things for overseas cheaper, especially when it comes to the goods that we use to make our stuff over here in the US. So it just didn't make sense. Actually, instead of adding protection today, we ended up on Baidu, we took a little bit of protection off. We booked that just very little bit on the puts. We took it off, and if you were to look at this chart here, the question is, are we at 1, 2, 3 head and shoulders triple top? Are we going to break? Well, we broke above the 50-day. We broke above the 200-day. So the question is this the big breakout today that we need to find out? Is it going to really go higher? Pretty interesting, because Abraham made a question, or put a question into us. The question is, where do you discover what happened today? In general, ADP, I was just up in the morning, and I get reports. I probably have 20 different things that come across as alerts. And I believe this alert actually came from the SEC, and it was written by probably US Bank or Bank of London, something like that. And I just watch. Got my kid on one side of me in a bed in the hospital, got my laptop on the other. I can multitask like the best of them. But short answer is, that was our decision today. We really struggled with trying to decide, is this the flush down or not? We ended up deciding, hey, plain and simple, it's Europe. Europe. The euro is at a 20-year low against the dollar. That means buying goods, services, materials from Europe is cheaper than it's been in 20 years. And we waited, thank goodness, because the market finished up today slightly, right? We finished up quite a bit. Market was up 0.16, and we were up 1.22 as a whole. But we took a look at Baidu. We took off our protection on Baidu today. We took off our protection. We're going to pay a lot of attention tomorrow, but triple top, or are we going to go higher? That's the question. Our bet was that we think we're going to go higher. Kevin, why do you think Baidu would go higher? Well, because our administration is going to loosen up on the tariffs, it looks like. It'll make it easier for things to go back to the way they were. What does that mean for Baidu? $380 a share. And believe it or not, Kathy Wood can still artificially inflate that stock with the money she has on the sidelines that she will continue to throw into Baidu. Apple is the other one. Kevin, I can't believe you were taking some protection off today. It's funny because part of me wants to say, hey, that was Keve's fault, right? Keve took the protection off. But again, we took a look at Apple. Apple is going off of a reverse head and shoulders or a triple bottom. And our bet is we'll get above 145, but we probably won't get above 157.94. But Kevin, you're not over the median line. It's still technically bearish. Kevin, big money kind of looks overbought already. Those are all valid thoughts. But at some point, you've got to take that chance. At some point, you've got to believe in and use the level 1 education. Hey, technical analysis, sentimental analysis, fundamental analysis. You have to be looking at all of those, and you've got to have something that has an upside opportunity. And Apple and Baidu are the two that appear to be that way today. As I was thinking about what was coming into us, as I was thinking about what I was feeling, pretty amazing. I got to talk to an individual, and she's like, Kevin, I've only got $6 million. And of course, my ears perked up. I was like, wow, I think that's good. Well, it used to be 9. I went, ouch, 35% loss. When was that from? And she's like, oh, since December of last year. And all she could do is just really kind of get pissed off about a little bit about the fact that the market's so difficult, which is interesting because I'm paying attention with my boy, child psychologist, excuse me. The number one skill that sets mentally strong kids apart from those who give up and how parents can teach it. Mentally strong kids understand the value of hope. And as I was reading this article, which is really sent to me, well, actually, I think I picked it up just out of our local news. It hit me. Are you still hoping for those better times down the road? And of course, the analogy for the stock market is, well, you don't trade on hope, which I agree 100%. But you've got to have some hope in the fact that if you've done your numbers, that these stocks will get back to the value that you've calculated. Again, I keep referring people back to myhurleyinvestments.com, and we talk about we keep talking about the January 10th commentary. This year it's been seen twice as much as all the other ones because I calculate what prices those core holdings that we hold should get to. We do the work ourselves. We're not believing someone else. We sat there and we worked. Basically, it was all Christmas. We worked on finding exactly what that number for our stock should be. And I showed you exactly how I did it. And so many people have commented on, well, those aren't right this year. And they are right this year. It's just they're being affected by some outside sources. Eventually, fundamentals win out over sentimental analysis, technical analysis, dumb money, which is retail traders, against smart money, which is hedge funds and institutional traders. The numbers are the numbers. They don't lie. And as I was talking to this poor gal, it's interesting because I guess just by habit, stop the negativity in the moment, right? It was like, geez, things are bad, but for crying out loud, there's $6 million there. Have you cashed everything out? No. Are you just going to go dump it into Treasury? She was like, hell no. It's like, all right then. Stop that negativity in the moment, pull your head around and focus on what you have that's coming up. I kind of giggle, use hopeful mantras. There's always tomorrow, it'll be okay. That's not necessarily true in the stock market, but it was really interesting to talk about brainstorming. And Stan, slow down so you can think, tell your problem, ask what else can I do, name everything you do to solve it without judgments, decide on the best choice to do it. The stand technique is what we do all the time at Hurley Investments. What's missing in there is the, tell your problem. The ask part is ask and do a crap ton of research. But when you do that research, you can then share some hopeful news. Hey, Apple technically should be trading at 196 to 203. And just recently here, an article came out, I think I have it in here, on just that. Well, we at Hurley Investments knew this on January 10th. We knew it back in December of last year. We already worked our numbers and we knew where that hopeful news was at, what that dollar figure was at, how much potential we have in whatever I'm trying to tell you, Apple. For that same reason, last year when Ford hit $25, we started to lighten up by half on Ford. And then Ford continued up to what, 25.87 or something, and then the bottom fell out. Kevin, how did you know? I didn't know, but what I knew is at $25 and change, Ford was fully valued, and it was time to lessen some of our position because there wasn't very much upside available in it. And then the sucker's trading down at, 10 or 11 bucks today. Kevin, and I know this is for Abraham, how did you pick the top on Ford? Well, I didn't pick the true top. The true top was like $25.87. We were selling off at $25.25 up to like $25.55. But it really came down to it was fully valued at that price. I knew bigger money would be running those calculations and they'd be taking their profits. So all I tried to do is take our profits when big money was taking their profits. Thank goodness, right? Ask the what if. What if our market does rebound by the end of the year? What if we get a flat year because the elections that are coming up? What if our market reacts worse to our Fed rate hike on the 27th of July of 75 basis points yet again? Do we get protected for it? It's like, of course. Celebrate the small gains. Today was a small gain for us. Today as a group, your group, the 16 million, that's the education group. You guys are up 1.22. The 401k group was up less, only up like 1.18. I never checked Keeve's group and his stuff, but small gain, we beat the market today by 1%. I still look at it day to day, but I judge us month to month on how we're doing. I look at it week to week. Are we beating the market? If we're not, what do I got to change? What do I got to do to react to a market that we're not beating? And I go through those calculations with Keeve all the time. Boost assertiveness, create gratitude rituals. Out of curiosity, anyone here, what do you think my favorite gratitude ritual is when it comes down to, I don't know, when things kind of work my way, right? What do you think my gratitude ritual is? Jim, I'll answer that question here in a minute. So out of curiosity, you manage tens of millions of dollars in the stock market. What do you think my gratitude ritual is? William, I can't say that in public. Bill, I love it. Camping trip or hunting. And so the reality is, and yes, Mary, I'll go take a Saturday or an afternoon and I'll go fishing. Jim, spend time doing something with your family. So Jim's like, Kevin's just a good guy. Yeah, but my reward, my gratitude rituals, it's all about me. uh, I love being able to take off from the market at noon and go hit a round of golf. So I'm done by 4 for dinner at 5. They're just a little, a couple little things that I will do that I guess are just a reward or something that's a little out of the ordinary. Again, taking a day to go fishing on a Saturday, fishing just in the afternoon, or a round of golf. That's my little gratitude ritual for, hey, we're okay for today. And then it's really interesting, embrace service, find ways to help other people. And I thought it was really interesting as I've dealt with my son, how many other families were hurting just as much, if not worse. And how it was fun to just start to bring food to people. I mean, I felt like a hobo. I was walking into the hospital with bags of just food and stuff. Hey, I know this family likes Pepsi, drop off Pepsi there. Hey, this family is 4 hours away. Let's get, a put together Kentucky Fried Chicken meal. Just things that we would do to try to help out those other people. And I think that's that mental toughness that you're going through that you have to be in today's market. The alternative, just so you know, and it's horrible, the alternative to how do I say this? The alternative to not bucking up, right, is quitting, which equals huge losses. I'm going to say letting it ride, which in my opinion is gambling. I don't know why you would gamble in the stock market, right? Or never having financial freedom. And the neat thing is financial freedom is based on everyone's perspective. I believe it's kind of interesting. I think I put the article in here. Did I not put it in here? Oh, I've got to get it in here. There's an article on what you need to retire in certain cities, right? I don't have it. I've got to find it. But it's interesting because what makes you rich is based on a dollar figure that you may have as a net worth above and beyond the other 99% that were below you. And again, financial freedom, it's interesting. I mean, I don't quite feel financially free. I know I'm going to have, a $90,000 hospital bill coming my way because of my crappy little small business insurance. But we're working on getting our house paid off. I mean, I could technically pay it off what I have set aside. A lot of my net worth is in the value of a home that's 4 or 5 times what it used to be. Liquid cash net worth is where I think most of us find our financial freedom. And that liquid cash net worth involves obviously our trading accounts, how up or down they are, where we're going to be at certain points in time. I mean, it's interesting that, again, it comes down to that mental toughness of what you see and the reality difference between the retail investor and I'm just going to call them big money. What's the difference? What do you guys think? What's the difference between us and big money? We're all doing things roughly the same way right now. Big money knows in advance. Possibly, I mean, if they do, that's insider trading, but what's the big difference? Bingo. There you go, William. Time. It's time. Big money, it's much easier for big money to wade through recessions and down markets than it is for us. They manage their time in the markets better than we do. They have enough to allow for the dips and the movements in the market. We're told, right? Hey, don't be in the market with money you can't afford to lose. Well, I think that's pretty damn stupid, right? But how about be in the market and give yourself the time to allow those things to come back? And that's the difference. I mean, that's truly the difference. Now, a couple of you have said, hey, they can move markets. They talk to the company's head, so they have a clear advantage. That said, moving large amounts of money affects the price. True, but that works for us as well. We looked at Apple and Baidu and Facebook today. They all moved pretty good. That affected our accounts. I just thought it was pretty interesting that that plain and simple, you make those educated choices the best you can. And you make those educated choices based on the information you have and the time that it's going to take for things to come back. So I found it pretty darn interesting in that regard. Someone just asked, well, should I take my protection off of Apple as well? And again, we just went to the charts. We're taking a risk on Apple. And we only have about $16 to the upside of the 200-day. We decided to give it a chance today. Tomorrow, we might be putting that protection right back on again. We hope to be putting it back on closer to 145, 149. The reality is we think it can go all the way up to 159, 160 basically. So I guess the 200-day is 157.94. That's where we'd be looking to add protection back onto the 200-day simple moving average. So we took a risk today. We said, you know what? We're above a previous low and a previous support level. We took a look at our work week, and which is kind of funny because the comment that was made to us, what do we do? As we took a look, pretty quiet week this week, right? Levi reports on Thursday, factory orders. Tomorrow should be okay. Wednesday, FOMC minutes, probably going to hurt the market when those come out. ISM Services Manufacturing Index on Wednesday, ADP report on Thursday, average work week on Friday. We see for this week a little bit of a rebound, maybe a little bit of hopium, right? Then next week we're all screwed again. All of a sudden we're going to have CPI numbers and options expire next Friday. The first couple days we don't have any economic report, so we're just going to be news driven. Next week looks kind of worrisome. Next week we're going to start protecting through earnings and protecting for the rate hike announcement that is expected to come in July 27th. And we're going to start to protect ourselves a little bit early for earnings that are coming up, which are also expected to be pretty dismal this quarter. So the comment is, make your best educated decision. And we went on a flyer for the last hour and a half of the market today, and we're ready to put puts farther out in time back on Apple here shortly. So again, a little bit easier for us when we have 160 puts that we were taking off for a bit of a profit. So that was easier for us to make that decision. All right. Next week, I will have our earnings list so you guys can see our core holdings and the stocks that we follow. We'll go through those so you'll know when earnings are coming up. I really liked what it all means. Stocks and bond prices are looking more aligned with their economic views, and these views aren't favorable. The counter-cyclical utilities, consumer staples, and healthcare sectors are relatively strong, which is why, Kohler, I haven't been too worried about moving over Dominion yet, because it really looks strong in those service areas. Commodity prices are softening too. Well, that was before today. So whoever wrote this forgot that commodity prices really spiked today when we had the understanding of the euro versus the dollar and a recession happening in Europe. I really thought it was pretty interesting that the good news is that there have been some signs of improvement in the stock, bond, and commodity markets recently. And again, that's not going to probably happen in July. My expectation is we're still going to end July down, but it won't be, 8% or 9% in June. It might only be 2%. And really the majority of the majority of what we're looking at will most likely come, our losses will come the last week of July with, again, another rate hike. It just, it's ridiculous. In fact, I think I've got the article in here that talks about how rate hikes right now, well, so let me ask you guys this question. I'm going to change that up. What is the cause for our inflation right now? What is the cause for our inflation right now? And there are a couple different answers that are going to hit that, but what is the cause for our inflation right now? I see two things, and it's pretty easy for me to see. So yes, I mean, the first answer is politics. But that politics is really, we are now paying for the stimulus. We are paying for it right now. Too much money printing, catching up with us. Exactly. That's number one. That's one of the big effects we have here in the United States. What's number two? And this is a worldwide issue. It's not just us. But what's the second issue that we're dealing with that is causing the inflation? Supply chain issues, exactly. It's a supply and demand that's boosting price. I mean, I freaking paid, $9 grand more for a car for my wife, and I did that a year ago. It was a year ago that I was overpaying for chips, and it's a supply and demand issue, which makes no sense why you're raising interest rates. I mean, call I Love Greenspan. He had an article out recently that basically was saying, man, the Fed just doesn't know what it's doing. It just doesn't understand what they're doing to themselves. So I found it interesting. I found it pretty interesting that that's where we're at. That's where we're at, and that's what we have to worry about. Taking a look at the markets, really, low tide sink all ships, right? We're almost positive the market is in a time period of indecision. We're moving sideways. Last time we moved sideways, we took a drop from 33,300 all the way down to 29.7. I mean, we basically took a 10% drop down there. Something to be paying attention and having on your radar, something to be looking at for the whole picture. If you look at the S&P, kind of much the same. It looks just like the Dow, kind of just floating sideways to down. Last time this happened, same thing. Something falling from what, 41.77 all the way down to 36, 10% drop. If we have our 10% drop here, another 400, that'll put us down in that 3,400 range. Not quite the 3280-ish or the 3,000 mark, but just things to be paying attention to. You want to see where the market's heading in general. And then obviously the NASDAQ, little bit of a rebound. It's been beat up the worst. You just want to pay attention. That is Compass. That is not the NASDAQ. That is Compass. So the NASDAQ, got to put the dollar sign in front of it. The NASDAQ, 12,320 all the way down to 10,565. That was about a 15% drop. And again, it looks much like the S&P and the Dow. So just some things to make sure of is that you're paying attention to the tide so far, as you can see it in the markets. Pretty interesting because on all three, you've got maybe the MACD that's being a precursor to some upward movement for the next couple of weeks. Again, we'll still probably be down overall in July. It'll come through earnings at the end of the month through August, and it'll come with another 75, if not a full 1-point rate hike that Powell's talking about for the July FOMC meeting. It's just stupid, just ridiculous. All right. Not much going on in general. I have an article, is the bear market coming to an end? Here the indicators pros say to watch closely, just so you can look at some things that I'm looking at. Asset manager says the S&P 500 is primed for a rally and reveals his top picks. I probably only had this in here, not that I really believe it, but because his top picks are Disney and Facebook and Apple and stuff that we all trade. Rising interest rates is the wrong solution to the inflation problem. This is where I would tell you, if you're going to read anything, focus on this article. This is where I've just went, who am I to go rip on Powell, right? I'm a nobody. But if you read through this article, it really explains the supply and demand versus the inflation issue, and the numbers back it up. We're using the wrong monetary policy solution. The child psychologist, it's right there. You guys will have it. With recession fear surging, UBS dips into its historical books to predict what could happen to stock markets. Again, it's just giving you some hope on, hey, with time, here's what we're looking for and where we can be. And then again, I've got an article or two on Ford. Examine the stock market's pain points to hold into the bounce from the lows. Just trying to give you guys some more information on regards to some things that I'm looking at to try to make my best educated decision. With that said, what questions do you guys have for me tonight? What questions do you guys have for me tonight? Ma, if I can just read that, except housing is out of control, so I need to raise rates, but I agree the Fed creates the bust bubbles and that's their mandate. uh, I cannot disagree with you, but my head is shaking up and down going, yep, that's so true. What questions do you guys have? So Kevin, what is your plan for the near future? William, great question. Right now, we probably have 75% of our core holdings with long puts in place. We even have a couple extra on a couple different stocks, probably like, well, Disney and Under Armour, I think we took off the extra ones recently. But our short answer is we're preparing for earnings and we'd rather stay overprotected than underprotected right now. Does that mean that we might not beat the market like we were doing today? You know, market only up 0.16. We were at 1.22. Beat the market by 1% today. We're not in a big hurry to take off our protection because of what we've seen on how the market's reacted to rate hikes. We are looking at taking our protection off and rolling it farther out in time for earnings that are coming up the end of June. Next week, JP Morgan has earnings. So we're looking to get that rolled out and to protect, really we're protecting on a one-off basis. There's not some market indicator that we're looking at that is telling us or predicting where we're going to go and what we're going to do. We had it pretty good though today. Apple was up. Baidu was up. Costco was up. Disney was up. Dollar General up back up to 250. That's an interesting one for us to look at. Google L was up. Banks were basically down. Coke was down, so we added some protection on Coke today. Lockheed Martin was down. We protected Lockheed Martin again today. Meta, Facebook was up $8 or 5%. Micron was up 3%. We do have puts on Micron. We'll have to take that off soon. Starbucks was up a quarter. Square was up $2.83. Under Armour was up 24 cents. Visa was up $1.36. So we had a nice up day because we had many of our core holdings that had much bigger bounce backs than the S&P 500. And that's what we're looking at. I mean, our hopium, right? Our expectations, the positions we are in have fallen twice as bad as the S&P 500 on some of them. So they have twice as far to come back. Early in the year, we had like a 2% up day in the market, and we had accounts that were up 7 or as much as 9% in a single day. That's what we do by adding the shares and protecting and making up money on the way down. So just to give you guys a heads up there. All right. Hey, I don't see any other questions coming in. Pleasure being with you here tonight. Jim, I will find the time to post all this on my Hurley Investments tonight. And so we will have that article will be there at the My Hurley Investments. You can just click on it and you'll be able to see that article online. I hope this was helpful. Mark, how am I doing? Todd, how am I doing? Are these helpful for you guys? I know they're a little bit different, but my understanding of what I'm trying to do through these is to really give you guys the information to be prepared for this coming week. So Mark and Todd, please send me some feedback on if these are helping you, if it helps you look at the week in general or look at the month in general so you can make your best educated decisions on what you're doing. Thanks, Mark. All right, guys. Hey, have a great evening. Pleasure spending an hour with you tonight. Look forward to seeing you next week. I'm not sure if we're going to cancel our trade findings and adjustments for Thursday or not. We're probably going to look to see how our market's going, but we would not be putting on any new trades at this time for the future. So it's just probably going to be a Q&A half hour for you with Keeve on Thursday. Todd, thank you very much. I appreciate it. All right, guys. Hey, have a good evening. Pleasure being with you, and I look forward to seeing you next Monday evening. Bye-bye.